What if there was a single number that could tell you how fast a commercial property investment could pay you back? Well, that number is called cap rate. Hey everybody, I'm Randy Wolfe, and in today's video we're going to be talking about the cap rate. Cap rate, or capitalization rate, is the ratio of a property's NOI to its purchase price or the property value. Be sure to stick around to the end of the video today because I'm going to show you a shortcut where you can use cap rate to quickly compare deals. So let's dive in. Cap rate is calculated as NOI divided by property value. So for example, let's just say a property generates $60,000 in NOI and it's worth $1 million. That would make the cap rate 6%. Now, cap rates are used primarily in the commercial real estate space to compare investment opportunities. A higher cap rate typically means higher potential return, but on the other hand, it also typically means higher risk. A lower cap rate usually means lower risk, but unfortunately, you're probably not going to get as good a return because it's a more stable type of market. A lower cap rate, lower return; higher cap rate, higher return, but you've got to make sure you factor in that risk involved as well. Now, investors use cap rates to gauge whether a property is priced fairly and to compare different markets. So for example, and I'm going to use some fictitious things because over time this could change, but let's say like New York City may have a 4% cap rate while smaller markets may offer 8% cap rate, right? It just depends on the market and the city and how competitive it is and that sort of thing. Now here's a pro tip I want to give you. Don't rely on cap rates alone. They don't account for other factors like, for example, financing, tax benefits, future appreciation. What you have to do is you have to use them as a starting point. Then you dig deeper into the numbers, the cash flow, market fundamentals, that sort of thing. And here's a little value nugget for you to think about. Cap rate is basically like a quick snapshot of return, but it's only one piece of the puzzle. So you want to make sure you combine it with other metrics so you can understand the full picture for smart investing. If you want to learn more about investing in real estate or how to analyze deals just like a pro, be sure to subscribe to this channel. It's very simple. Click that little button in the bell notification because I'm putting out content each and every single week, y'all. Each and every week, it's absolutely free content so that you can learn how to be a real estate investor. And all you got to do is subscribe and keep watching it. If you found value, like this video. And lastly, be sure if you want to take it to the next level, check out my private community. Now, we're currently, our private community is full right now. We're not taking any new members yet, but you can go to the link in the description below and you can sign up to be on our wait list, and we'll notify you once it's open. Or maybe you're watching this video in the future and it's back open again. So anyway, check that out if you're interested. But as always, I appreciate you watching and I look forward to seeing you on the next video.